You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, everyone's favorite bi-weekly source for all things options related. Took a little bit of a break for the old Labor Day weekend here in the States, but now we're back and ready to block some options. My name is Mark Longo from theoptionsinsider.com, as well as from the ever-expanding, ever-exciting Options Insider Radio Network. If you want to find out what all those new shows I'm talking about are, then check out our mobile app, check out the mothership, the website. No shortage of ways for you guys to find our stuff. iTunes, Stitcher, Aha Mobile, wherever you like to download your podcast from, we're up there. So lots of great stuff. And if you check out the mobile app, of course, it has pretty much everything baked into it, including all of the shows. You can stream or download instantly wherever you are. Wherever you have signal, you can access our network. And of course, maybe you want to download a few for offline listening. And while you're listening, say, hey, I really disagree with that Alex guy. I don't like his hat this week. Let us know. Shoot us a question, a comment, an email, a tweet, a Facebook question, however you want to do it, even a voicemail. No shortage of ways for you guys to make your voices heard on the old program. I should mention here at the top of the show as well that we are 1 week away, only 1 week, listeners, from the big live show extravaganza. We haven't done this in a while. We did it a few years ago, and it was really fun. So it's fun to do it again. We're taking over another venue here in Chicago, Thursday, September 11th. So next Thursday, if you're going to be in the Chicagoland area, we'd love to see you. It's going to be at Benny's Chop House. That's at 444 North Wabash Avenue in Chicago, of course. I believe it's going to be in the bar area or somewhere near there. I've never actually been to this location. I'm leaving the logistics up to Mr. Sebastian, the Greasy Meatball, which is always a scary prospect. So we'll see how well he does, listeners, when we get there. But there'll be room for you guys to come check out, listen to the show, maybe some fun tchotchkes, some fun special guests, all sorts of fun stuff. Nice extended edition of the show. We'll probably have some beverages into us as well, so it'll be even more rowdy and raucous than usual. So check us out next week at Benny's Chop House. If you're going to come, let us know. Shoot us an email, events@theoptionsinsider.com, to say, hey, I'm going to be there, just so we know. You don't have to RSVP. We just always find it helpful when we're doing things like this to know how many people we're going to squeeze into these places. All right, that's going to do it for my intro at the top of the show. But of course, I'm not alone here on the old All-Star panel, not by a long shot. I'm also joined by my boon companions, starting off with he of many hats, none other than the Viceroy himself, Mr. Alex Jacobson from Options Express by Charles Schwab. Alex, welcome back to the show, sir.
Hey, Mark. Good to be here today. And an interesting market today because there's a lot more that went on today than what the averages seem to indicate. This market wasn't doing much. VIX wasn't doing much. And then BP news hit in the afternoon. They just killed everything energy related. Our customers were just slapping BP. They were doing every bearish scenario you could consider today. So lot of kind of undercurrents in today's market, and we'll talk about that.
And also joining us on the old program today, you know him, you love him, as the Rock Lobster, Mr. Andrew Giovinazzi from the pit. Mr. Giovinazzi, welcome back to the show, sir.
Possibly soon to be known as the Odd Father.
Yes.
Possibly.
Yes, possibly. Another nickname to add to the equation. And it's always much more fun when I don't just bestow them upon you, but the people bestow it upon you. That's the best way to get a nickname. Sir.
Yes, when the peeps bestow a nickname on you. So so far that's what I've got. We'll see how long let's see how long it holds out.
All right, listeners, we'll also be joined momentarily by Uncle Mike Tosaw. He's having his usual Skype problems out there in scenic and sunny St. Charles, Illinois. We hope to add him in very shortly. But meanwhile, we're going to get started with the old program. It's time for the Trading Block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, listeners, if you've been listening to the show for a while, you know what time it is. It's time for us to break down what caught our eye, what was moving in the old markets. And quite frankly, today wasn't a heck of a lot going on. Most of the major indices closing off fractionally on the day. The S&P is down about 4 handles. The Qs, that works out to about 1/4 of a percentage point. Qs down about the same percentage, and the Dow down even a little less, about 1/10 of a percentage point. So not exactly a wild and woolly day on the old street. VIX cash ticking up a little bit, up about 0.4 of a point to 12.75, right in the kind of middle of that range. It's been banding about for quite some time here, up to around 13 or so, down to around 11 or so. So banding about, I guess, on the upper end of that range, but not a heck of a lot going on, aside from what Alex alluded to earlier with all the BP fiasco, I suppose you can call it. I just found out today, oddly enough, that some distant family members of mine apparently put a lot of their retirement into BP, and apparently never listened to our shows because they never had a put on it. So I'm guessing today was not a banner day for their retirement portfolio. Mr. Alex, BP was lighting up the tape. Tell us about that, and what else caught your eye over there at OX today?
Well, almost everything oil related was lighting up the tape in the afternoon. So when the BP news hit, essentially that the court said that they're about as guilty as they can be, and there might be as much as $18 billion in damages. It took everything related down. So it took the Bakers and the Schlumbergers down. So, it looked like it was a quiet day. Vol was even down a little bit. Then kind of that news hit. They just slaughtered everything oil related. The other thing that was going on here today, and this is kind of strange, and I'll leave some of this for Mike, but Apple was just lighting up the tape here again, as it is at most retail firms, and the 4-point loss it had the other day seemed to kind of stun people and move them to the sidelines, because the volume seemed to drop dramatically after the 4-point loss. And in fact, there was a little chatter on OX Social about Apple, and a lot of views about, don't worry, wait for the 9th. The other big stock here today was Amazon, which bucked the trend today. I think it was up 10 handles earlier in the day. I think it only ended down around 7. Now, Amazon of all the tech is the stock that's still down for the year. It's up big off its lows, but it seems that Amazon has gotten some trade lift again in the OX customer base.
I'm not sure if you're aware there, Alex, but Apple is a stock that you pretty much only buy calls and sell puts in. So days like yesterday and today, when it sells off a bit, they don't really know what to do with themselves out there. That's not what they've trained for. It's not what they prepped for out in Apple land. Your long bullish risk reversals, essentially, Alex, and if it moves against you, they can't really handle it.
That as much as you're saying that kind of tongue-in-cheek, it seems like that's exactly what happened. It seems like people were stunned by the sell-off yesterday and moved to the sidelines today.
And Mr. Andrew, in addition to your work as the odd father these days, I know you guys are sparking up a lot of conversations over there in the old pit chat and doing a lot of that educating over there in the options realm. What's catching the eye of all the mentees and the clients over there at the pit? What names are they asking about, and what's catching their eye over there from an options perspective these days?
There's talk about vol futures just not doing anything anymore. VXX not moving ever again. That used to be a pretty reliable fade on non-farm payroll. We'll see what happens tomorrow. There is a ton of premium in those products, and it's just we're looking forward now till the middle of October. The VIX is staying pretty bid, and nobody's selling it. I think the big problem is just I think we've got like 2000-itis, I'm calling it, where the market's stuck at 2000 and it ain't going anywhere. And like a day like today, I think we got a report at the end of the day. Like David Tepper says, sell bonds and sell stocks, and he's a pretty smart guy. So that was good for a little sell-off. We did look at Amazon. We couldn't find anything really interesting in it, but it was just again, weird day, low vol, but still like stocks, besides Apple. I'm going into, Google was up $4, Intel was up 1%, Microsoft is up, LinkedIn traded 230. It hasn't seen that for a while. The chip stocks doing pretty well, like old tech doing pretty well. So the Qs, pretty much, unchanged, but like the old tech part of the Qs, we're doing fine. The solar type stocks, doing okay. The Sun Cities, Tesla, because Tesla has their plant in Nevada, and I guess they got all kinds of tax breaks. So Tesla's, I think today's a new high for it. So I think the dollars were looking for growth, like the broader market stuff is kind of stuck. And what we're looking at is stocks, the growth stocks that have caught people's attention are still catching people's attention. So if you want some little upside jazz, that's where you go, maybe a little gamma, even selling some put spreads in those stocks. Kind of selling put spreads in the old tech and sort of getting long the new technology as a way to finance. Again, interesting ways to be long because as much as we like to say, the market really is not selling off a whole lot right now. And it seems to be stuck around 2000, and that's where we find ourselves.
Oh, go ahead, Alex.
Oh, no. I was just saying that, Andrew was talking about the old tech rallying and Tesla being up near $300. It's kind of interesting, the momentum we're seeing in the market. Andrew's comment about Tepper saying sell stuff. He is out there raising money right now for permanent capital for the hedge fund. And I'll tell one interesting hedge fund story, which will put me back in the arcane, geeky category. But over the holiday weekend, I was talking to one of my hedge fund buddies, and he said, remember John Corzine? And I said, yeah, of course I remember John Corzine. And if you remember what took MF Global down from a trading standpoint, I'm not going to address any other misconduct, but from a trading standpoint, the thing that took MF Global down is they bought a bunch of Spanish, Italian, Portuguese sovereign debt when nobody wanted it. And they were buying, stuff 70, 80 cents on the dollar, and when the firm failed, they were probably selling it at 40 cents on the dollar, and it got dumped to some other hedge funds and quant funds and some of the banks. The irony is here we are looking at rates today, and all that stuff is selling at a premium, which means it was probably one of the most brilliant trades of all time. And again, I know I'm going to get emails. I'm just looking at the trade here. But Corzine, in hindsight, from a trading standpoint, was a genius. He may have been a lot of other things, but he was a genius. That trade would have made, I don't know, back of the matchbook calculation, $7 or $8 billion. So it's interesting what the undertone is in terms of what's going on right now.
That's something we say on the show a lot. It's all, at the end of the day, about stake management, and it's about time management. How many of us have had those trades we've talked about? We've been right on everything. We've been right on direction, right on vol, right on premium income, whatever the case may be, and you just ran out of time, your time frame, your guesstimate of that was wrong. And as we talk about this on the show all the time, rolls and adjustments, half of the odd block is that on any given segment, because your time guess has to be right too. And you're right, that was a good do, as we used to say on the floor. But in terms of being able to stay at the table until that winning trade came around, doesn't sound like he was able to. And of course, he then dipped into the customer funds to keep that seat at the table, which is a big no-no, which is why he's facing all sorts of fun indictments and charges and whatnot as a result of that. Going back to what you said a little bit earlier there, Andrew, you mentioned the VIX futures and all the fun stuff going on with those products right now. We should all, of course, be in Ireland right now. We should be having the live show in a pub somewhere in Galway Bay, because that's where, of course, the CBOE Risk Management Conference is right now. And they announced this morning that after all this talk about short-term VIX and short-term products, that they're finally going to incorporate the weeklies on the SPX into the VIX calculation. We've been speculating on this show and other shows on the network for a while that the weeklies are where the action is now. That's where a lot of the liquidity is migrating, and it's having a big impact on the term structure and vol and other things as a result. Seems like CBOE finally acknowledging that by adding that product and that series of products into the VIX calculation, the VIX methodology. Mr. Andrew, does this make you perhaps a little bit more excited about the VIX, or you think there's just a little bit much ado about nothing?
It's a massive change to the product. It will be like trading a new product.
That was kind of my takeaway from this, yes.
Because you're always looking a month out with the waiting a month out, and now waiting is they're going to start picking up the weeklies. VIX has just gotten a lot more volatile. And the lows could get lower. I don't think it's going to happen tomorrow.
It seems like they're kind of kicking VXST in the teeth a little bit too with this change.
You know what? I think this is what they looked at VXST. They saw the interest in it so far, and they're like, this is not really lighting it up for us. We're going to hedge and just list and just add the calculation from the weeklies, and we'll see which one trades. And either way, we're going to own both. So, but I think it's going to make VIX move a lot more. It's going to become a little bit more volatile. The lows are going to be lower. I mean, Alex and I just talked about a single-digit VIX, but if they're going to start picking up, the 8 handle from the first 2 weeks on volatility, it's going to be a lot. The product is going to be able to get a lot cheaper. So the swings are going to be. I'm just going to say the swings are going to get nasty. It'll be cooler.
Yeah, I'm kind of excited about this, actually. It makes the product that's already volatile a little bit more volatile, and it also takes some of the steam out of a product that hasn't really caught on with anybody. It seems like that VXXT product. Of course, a lot more to dive into this, listeners, on our Volatility Views program. Stay tuned for that. And now it's time to dive on into our next segment. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, you know what time it is. It's time once again for the Odd Block, the funky, the weird, the wild portion of the show where we dive into some of the, let's say, interesting paper that's lighting up our tape today. It wasn't the most active day today, but we still found some fun names to profile for you. Starting off with an Odd Block special, one of our typical cheapies. This is QuickSilver Inc., ticker symbol ZQK. In fact, they are reporting right now as we speak after the bell. They closed today $2.83, down about a nickel or so. In the after hours, things aren't looking too good. They're down about 40 cents in the after hours right now. Not surprisingly, this was a fairly robust day for Cheapy D here, aka ZQK. 1,300 contracts on a given day, doing about 25,000 today, so very, very robust volume today. When we profiled it this morning on the site, we profiled a 500 lot of the SEP3 calls going up for 20 cents. Looks like paper was buying. They lifted the offer on 2 exchanges, went up in 2 blocks, essentially on that trade. Of course, as the day went on, the paper continued to flood into that strike to the tune of 2,300 on the SEP3s, but that was not all. There was just paper palooza out here, listeners. SEP2s in the money calls, substantially in the money calls, going up 10,000 times on 82 contracts open interest. SEP 1/2s going up 2,600 times, maybe a 1x4. who the heck knows what was going on up there. Crazy paper. 4,000 the SEP 3 puts, 4,000 the SEP 2 half puts. Paper Palooza up here in QuickSilver. Mr. Andrew, take your pick of this Paper Palooza here in QuickSilver.
When I was looking at this, I profiled the threes because they were paying 20 cents for them, which, given what was possible with how the stock moves, I thought that was it was a ambitious purchase. And there was tons. Overall, though, the paper was basically just buying calls. And
so everybody got run over here right now is what you're saying.
I feel like to some degree, everybody kind of got run over.
The 1/2s, for God's sakes.
They were selling the SEP 2s on the close here down to 80 cents in the stock, and it closed 283. So, who knew? Somebody must have heard something about the earnings, because right on the close, all they did was pound these calls, pretty good size, just basically underwater.
That makes more sense. This kind of paper, someone hearing ahead of time, and I can see people blasting out a bunch of these. I can't see people loading up on a bunch of 1/2s.
Well, they loaded up on them early, and then the paper at the end of the day was selling. There's actually even an end of the day purchase of 1,300 of the 2.5 puts for a dime. So
wow.
The early paper wanted it, and by the end of the day, obviously after hours, I guess they didn't. The earnings weren't that good.
The call clearly went out because every in the money strike was lighting it up in SEP right now today.
Yeah. So they got somebody got front run in a big way by the end of the day. But all the paper early on in the day when we profiled it, when I looked at it earlier, it was all bullish. So all bullish and all wrong.
Wow, that's really painful to see all that going up. To see, someone clearly got the notice afterward, after all this paper went up, and just enjoyed hitting all those elevated bids. It must have been very, very gratifying for them, and very painful for the early paper here in QuickSilver. All right, moving on to more premium buying. Seems like today. This is in JAKKS Pacific, ticker symbol JAKK, trading around $7, so a little bit more primo than our last name here. Pretty much unched on the day. This is the name that does about 700 contracts a day. Doing exactly that today, about 700 some odd contracts again today. So it wasn't exactly the size that caught our eye out here, more the actual trade itself. It was a buy of the March, so very, very long-term paper. The March 7.5 calls. These are about 50 odd cents out of the money right now, going up 700 times and change. When we profiled them this morning, about 147, so clearly a lot more went up as the day progressed. Pretty much all the day's ADV going up in this one strike. A couple of 3 lots going up in some other strikes, but aside from that, pretty much everything on this one strike. They were purchased for $1.10. So this is just the aggressive nature of this paper alone makes it interesting. This guy traded through the offer, gobbling up. They're offered at $1.10 out, probably for size. This is paper that's very long term. So why is this guy racing to gobble up this offer in long term paper? Always kind of a head scratcher. If you look at the open interest, this is one of the few strikes in March that actually has any paper open, about 2,700 contracts. So this could be a guy who overwrote these in the past and is now scrambling to buy them back for some reason, even though they have some time to go yet. Either way, this is a bit of a head scratcher. What's your take here, Mr. Rock Lobster?
Again, head scratching all the way. Why would you be in a rush to pay up to buy those back if you wrote them? What's going to happen? You just get the stock taken away, at $8.50. It's trading $7.
Yeah, so, woohoo! That's a party time.
So it makes no sense. They traded through the offer to buy them. I just don't get it at all. On the face of it, though, it doesn't look like, it's pretty cheap premium to buy March at the money options for $1, in a $7 stock. So at least from that point of view, it's not too bad, but it's just a bizarre little stock that doesn't do a whole lot. Highs of the year, like 960. So it definitely could get back there, but as far as right now goes, it feels like the paper was front running like nothing. We'll see tomorrow if there's news, but to me, I'm going to look at the open interest tomorrow and just, look to see if it's additive or not. I have a feeling it's just kind of more of the same, somebody building a position, I think. It's what it feels like. It'd be a pretty strange cover.
No time to work it. He just had to get it done. He's like, I'm not going to play around out here. I'm not going to work my bid and see what I get. I'm just lifting that offer and beyond.
Yes, because the stock moves like 10 cents a day.
Yeah, I know. I could see you got to pay up a little bit to get done out here because it isn't exactly the most liquid name in the world. So maybe that's the best he could get, but it's just a head scratcher either way. All right, moving on to our next name here, our next victim on the old odd block. This is one of the ones we talked about in the past. Haven't checked up on them in a while. This is Corning Inc., ticker symbol GLW, makers of all sorts of fine stuff, including the glass on a lot of your smartphones and just about every other plastics type product and glass type product you can think of. They do about 8,000 to 9,000 contracts a day, so fairly robust from an ADV perspective, surely from an odd block perspective, and just lighting it up today, doing nearly 72,000 contracts today on pretty much no negligible change here in the underlying, only up about 12 cents, so pretty much unched on the day. And what we saw was just paper palooza here in another paper palooza, this time in Corning. When we profiled it this morning, we profiled 17,649 of the OCK22s going up for, appropriately enough, 22 cents. Went up in two giant blocks, including one of them going up on the Philly. The vol on that strike, not surprisingly, gapping up as a result of about a point after we wrote it. Total by the end of the day, about 23,000 of these calls having gone up on the day. Looked on the surface like it might have been a buy right, as in buying stock, writing the calls, but not with the vol gapping up like that. That makes you kind of wonder if perhaps it wasn't more of a buy here. We also saw some puts going up today as well to the tune of 11,000 of the OCK21 puts. So maybe there's a bullish risk reversal, or as Andrew in his dated vernacular calls it, a combo going up out here as well. What's your take, Mr. Andrew, aka you terminology dinosaur you?
I know the terminology. It's Combo City. It is odd that the calls go up 10,000 times, the puts go up 10,000 times. Is a nice credit, but they're about 5 hours apart, as far as stretch as you can get trading options.
He was hung on his deltas. He wanted to work them a little bit.
He did. He wanted to work them a little bit. The thing with this is, again, just like that early morning ZQK paper, really bullish. Like the retailers bounce, this Corning glass, with the iPhone coming out, possibly trying to ride a little bit of that iPhone 6 love. If indeed Corning does, I don't know what they supply to Apple, but very, very, very bullish paper on a pretty low volatility stock. Are they bad trades? I don't think they're bad trades. I think the combo in Corning looks like a pretty decent trade for a credit. I like that as an idea a lot, but mostly people buying calls. I mean, you pay 22 cents for out of the money calls and they're 27 bid by the end of the day. That's a pretty good purchase. That's mostly all volatility driving the price up. So somebody wants them, and we'll see what happens. Obviously, the QuickSilver stuff wasn't the early paper wasn't right, but maybe this Corning paper will be. So interesting and heavy buying is all I will say there.
That's what the people like, sir. They like interesting and they like size. So if we can deliver both of those things to them, they're happy campers here on the old odd block. And because it is that time of the week, it's time to crack open the old mail block and hear what you guys have to say. So let's get to it.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. This is, of course, a portion of the show where you guys get to chime in and join us here on the old All-Star panel. We've got a bunch of different stuff, questions, comments coming in here. I think we'll kick it off here with this question here. Mandel, maybe it's Howie. Maybe Howie's a big fan of the show. I don't know. But he writes, the question I think is on the tip of the mind of a lot of people in the options realm these days. It's a short but sweet one. He writes, what's a premium writer to do in this market? Any suggestions for good income trades here? Well, this is kind of the $1 million question these days, Mr. Mandel or Mandel. I don't want to mispronounce your handle there. We talk a lot on this show and other shows on the network about volatility in general being not exactly where you want it to be from a risk-reward perspective if you're looking to do a lot of income-generating trades. So people are going further and farther between to really find some good income trades, and when they do, they're jamming home some serious size. I'm not sure if you pay attention to the unusual activity that we post on the optionsinsider.com there, Mandel, but if you don't, I suggest you do, because a lot of the trades that we've been profiling of late fall into this exact category. People looking at names and doing a lot of research, finding names that sometimes pay a fairly decent dividend, and then finding a month and a strike and a premium level that adds a decent amount onto that dividend. We're seeing some rights going up, generating 3, 4, sometimes 5% a month. And when they find these things, they're just jamming 10,000 contracts plus into these whatever hole they can find to just try to carve out as much income as they can. So that might be a good place for you to start, of course, to check out, shameless plug, but check out our unusual activity available, of course, on the optionsinsider.com, as well as on this program. We talk about a lot of it here as well. And that could give you at least some starting points where people are going and looking to see where this paper is going up. Of course, you don't want to pile in after the 10,000 contracts, but it may give you some ideas for other months, other strikes, other names that you could go and look for and perhaps find some decent yield. And now I will, of course, toss it over to you as well, Alex, because premium harvesting is pretty much the name of the game over there in Idea Hub these days. So what's the Idea Hub coming up with these days for the premium harvesters out there like our friend Mr. Mandel?
Well, there is, first of all, to his point that he believes volatility is low, let's first of all discuss very quickly what low volatility means. And I know that this is something I've talked about for years in terms of teaching options. My definition of low volatility is you expect it to be higher going forward. So what I'm hearing, or what I'm saying I'm hearing in his question, is he expects volatility to go up in the next few weeks or months. So number one, if he's an exclusive premium seller, all he does is sell premium and he thinks volatility could be going up, one thing to consider is push away from the table. Don't make a trade. Don't look for something just because it's got big vol. However, as you pointed out, Mark, and things you can do in the Idea Hub, there's another section of the Idea Hub called covered call writing, which targets covered rights with a 7% static return. That means 7% unchanged return. And here's the challenge. It's not that you can't find them. It's, are you comfortable with the names you're going to see? So I did a Hub webinar the other day, and one of the names that comes up repeatedly in the covered call screener is JCPenney. Now, I know as soon as I say JCPenney, a third of our listeners go, no way, wouldn't go near it. Spent the holiday weekend in the mall, and there was no one in the penny store. But a third of our listeners are saying, I don't expect that stock to do anything between now and maybe Thanksgiving, and therefore it's a perfect premium sell because it's going to do nothing. And there are other listeners who are going to say, they're turning it around. And the penny store had people in it. It was the Sears store that had no one in it. So you could always find stuff, but don't reach to something you're uncomfortable with or something where you're not going to sleep nights. And if in your heart of hearts you think volatility is low, either A, push away, B, buy a little vol. I know for a lot of people that's sort of against everything they've been taught, but I was taught very early on by an OBO, an order book official on the CBOE floor. And he said, the difference between a good trader and a bad trader? And I said, no, please enlighten me. He said, a bad trader who hasn't made a trade all day will come into the OBO a couple minutes before the close and buy the book because he feels he or she's got to make a living. He's got to make a trade. He's got to pay the bills. A good trader will go home without a trade, but they'll be there tomorrow and the next day.
Good points, Mr. Alex. You're probably going to go a little bit outside your comfort zone these days if you're looking at that far afield for some of these covered rights and you're trying to really squeeze them into your portfolio. It's probably not a name you may be that well versed in, maybe a little bit more volatile than you care to deal with, a lot of other factors. Of course, also JCPenney, just not a very sexy name. So be prepared for that if you are going to look farther afield for some good rights. Mr. Tosaw, I see the Skype gods are smiling upon you once again. What do you have to say here for our friend Mr. or perhaps Mrs. Mandel?
All right. Well, Mrs. Mandel or Mr. Mandel, on my computer screen, if you want to go to the trade calculator on the Options Express website, this is just a random trade with which I am not in, but I just randomly brought up just specifically for this purpose. What I did was I just bought an October 202 call on SPY, and I sold a September 202 call on SPY. The cost of the trade is a $1 debit, so the maximum amount of money with which I can lose is $1. Now, what this does is this actually gets you a way with which you can have some bullish exposure to the stock market, and you can do this with, it doesn't have to be on SPY. This is just something random with which I came up with. But what this does is this actually gives you the ability to have time decay working in your favor, because of the fact that the September call is going to expire at a faster rate than the October call in theory. Once again, I'm not endorsing this trade, and actually as I'm looking at the vols of the two options, I really don't like it, quite frankly. But nonetheless, the other benefit of this trade is that if you believe that volatility is low and that volatility is going to go higher, this is a way with which you can be long Vega. Now, this isn't ideal, and I know that ideally, if we had a VIX around 17 or 18, that you could sell out of the money credit spreads in one way, shape, or form, and it would be a much simpler, easier thing to do. But in this lower volatility environment, if you are still a premium seller, or as Mark would say, a degenerate premium seller, you can look to doing a horizontal spread and have volatility technically working in your favor. If you're a little bit bearish, obviously you can do something similar with an out-of-the-money put calendar spread as well. So diagonals and calendars, I think, are the next spot to look in a low volatility environment.
Uh-oh, debit. You just blew his mind, sir. The D word, the dreaded D word.
Oh, that's an evil word.
All right. Mr. Andrew, take us home. What's your advice here for Mr. or Mrs. Mandel?
Well, I mean, there's lots of ways to generate theta. So we've been, probably the best structure lately has been the double calendar, anything similar to that, where you sell the front month, buy the back month, as long as you can generate some good positive decay with it, even on that famous Apple company going into this product announcement or after the announcement. You know, time spreads that generate that type of thing where you give yourself a little bit of room just in case the market sort of swishes or swoons down. It's not a bad way to sell it, just a little different way to think about. You actually have to buy the spread to generate the positive decay, which is probably freaks everybody out yet. That's all my thoughts. Look for time spreads, probably not too bad. A little tougher to search for, though, is all I'd have to say there.
All right, that's going to do it for the mail block. We have a few more we can hit on here, but I want to make sure, since we did miss our show on Monday, anyone who's jonesing for some strategy could get some today. So we'll hop into a quick strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the Strategy Block.
All right, no time for banter. Uncle Mike, the floor is yours. Go.
Alrighty, the ratio spread. I want to go over it briefly today. Let's say that you believe that you would like to own a stock and the stock is above where you would like to own it right now, but perhaps you would consider selling a put to get into the stock. For example, XYZ stock is at $55 a share. You'd love to own it at $50. You could sell the $50 put to get into it. But wait, there's more. Let's say that you would like to make money on the stock from 55 down to 50 because you're a little bit bearish on it right now, but you think overall it would be a good stock to own. Just in the near term, it's got to have a little bit of a pullback. One thing with which you may want to consider is purchasing the $55 put for, I'm just making up numbers here, $2, and then sell two, not one, but two 50 puts for $1 each. Overall, it's an even money trade. And what this does is this allows you to make money from 55 down to 50. You'll make $5. And once again, this is using our beloved expiration day risk graph. But my point is this is a way with which you can kind of take selling a put to get into the stock to the next level. And if you feel that there's some stocks that are at highs right now, and you don't necessarily want to buy them, and there's really not enough premium to sell a put against them, in your opinion, just to kind of add to the last mail block that we just did, this is something with which to consider. You can do a ratio spread, and if it's for even money, should the stock go higher, you don't lose anything. Should the stock stay the same, you don't lose anything. Should the stock come down a little bit, you won't get the traditional premium with which you would get from just selling a put, but you'd be able to use the juice in the put with which you bought to make up for such a bad situation happening for those of you premium sellers out there. And that is the strategy block for today.
All right, short but sweet, good stuff. Now it's time to dive into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, you know what time it is. It's time to dive into what's cooking, what's coming down the pike that we're keeping an eye on for the rest of this week into the weekend. Mr. Maine, a.k.a. Mr. Andrew, you shall go first, sir. What are you watching?
Basically, non-farm payroll. We haven't even mentioned it. First time in the whole show. Tomorrow, does anybody care? I don't know. The ADP number was kind of, was not sort of propelled, it looks like, this morning. Vol's coming down, and then everybody freaked out. I don't know about what. Maybe they're worried about the Russians, whoever, David Tepper, saying stocks are overvalued. But that's the big number, and see if we can get off this 2,000 number, this horrible 2,000 number. An interesting stat, by the way. So I think since December 2013, the stocks have not been down. The SPX has not been down 3 days in a row. I'm sorry, 4 days in a row. So we've been down 3 days in a row over the last three. So let's just see if we can break our little slide that we've been having.
All right, and listeners, I apologize. The Skype gods today are just being very fickle. What seems like all of our guests today, all of our co-hosts here. So whether it's Maine, St. Charles, no one is smiling upon them from a Skype perspective today. So maybe we'll toss it over to the Viceroy, Mr. Alex. What are you watching for the rest of this week, sir?
Watching to see if there'll be a rebound in the energy group, especially the drillers, because there's a ton of money that got cut out of the market today. Also going to watch biotech and drug stocks, ironically, and let me elaborate on that a little bit. We're taping this on September 4th after the close, and about 2 minutes after the market closed, the FDA approved Merck's cancer drug. I think there's going to be a big reaction in the biotechs and big pharma tomorrow, many of whom have stuff in the works along the same lines. Looking at macro stuff, German 10-year still under 1%. Our 10-year back up over 245, see if it can hold the 240 level, and watching the VIX.
Uncle Mike, what are you watching, sir?
In addition to what my other two cohorts had just mentioned, just while I'm watching, just to kind of add to what Alex said in terms of the bonds, watching TLT. Been coming off of the highs with which it made, and it's a very interesting thing to watch at this point. Also staring at Apple to see if we can hold the levels with which we're at right now. Is this a pullback or was this a top? And then also watching my beloved gold going into non-farm. There's going to be a lot of things happening, and I'm excited to be watching the pre-markets tomorrow at 7:30 Chicago time.
Yes, it is. You're right, Andrew, that we haven't addressed non-farms in the entire show till the end. Probably shows kind of where they rank these days in terms of market catalyst, not perhaps the big market movers that they once were. But that's going to do it for the Around the Block segment. It's also going to do it for this episode of the Option Block. But before we go, as always, I'm checking with each of my cohorts here, see what they have cooking that may interest you. Starting off with you, the diehard Mainer. The Skype gods are smiling from Maine yet again, sir. What's cooking? What's coming on the pike over there in the land of the pit?
Hopefully I sound lovely. That's all I can say. September 24th, 6:30 Eastern Time, intro to VIX and volatility products by Mark and myself, followed on October 4th by a paid $49 for what will be an intense volatility product seminar.
All right, sir. Thank you for that. We'll get your Skype worked out. Don't worry, listeners. We'll have Andrew back, sounding good. He's using the same connection Uncle Mike is out there in St. Charles. Speaking of which, Uncle Mike, take us home here, sir. What do you watch? Oh, I'm sorry. One more thing. What's coming down the pike over there in the land of RCM?
We had our newest batch of clients come in for the people that wanted to just kind of get started with investing. So if you're looking to invest around $500 a month and that's all you have, we would love to take you on as a client if you want someone option-based to do so. We've cleared up our dockets, so to speak, and we're able to take on some new clients again. So feel free to give me a call at 312-212-3531 or send me an email at mtosaw@rcmam.com. Would love to have you. And on a final note, Bills 37, Bears 31. My son and I are going to his first NFL football game this Sunday. Can't wait.
Making friends left and right with those predictions, sir. Someone in the northern reaches of New York is cheering right now, but no one in Chicago is cheering your name, sir.
Everyone hates me, but by gosh, we're going for the truth.
Someone in the Chicago region was picking up their phone, saying, I gotta get in that deal. Then you just made your Bears prediction, and they just slammed it down in disgust. So there you go. Cost yourself a client.
Real.
Yes, sir. Maybe you want a financial advisor who tells it like it is. In which case, Uncle Mike, he's the go-to guy for you. All right, and certainly last, and certainly not least, the Viceroy. What's coming on the pike over there in the land of OX?
So this Saturday, September 6th, live event in San Diego. That's Jimmy Ruzan and the crew, does about 3/4 of a day. You can come to the site and register. And if you can't make it to San Diego, the event is simulcast. And you can come to the site and register for that. You'll get the link. 3 events on September 9th. Jim Wyckoff, who writes the famous Wyckoff letter, will be doing his monthly futures outlet. Nina Milovac, one of our education folks up here, will be doing a platform tour and going over some of the new features, the all-in-one trade ticket, the walk limit. And then the evening of the 9th, 8 p.m. Chicago time, I'm going to do an iron condors and iron butterflies, and I'm going to do it live. So I'm actually going to tee up a trade in the OX platform, walk it through the all-in-one trade ticket, walk it through the walk limit, the trade and probability calculator. And as you can imagine, that's a precursor to what we'll be doing on the Schwab side when that 3- and 4-leg trade ticket is up there and available.
All right, thank you for that, Alex. And on behalf of the whole team, let me thank you here for joining us on this somewhat technically challenged episode of the Option Block. Don't worry, it'll sound better next time, and it'll sound even better, or perhaps worse, depending on your perspective, the time after that, because that's the big live show. Thursday, September 11th, right here in sunny and scenic Chicago, Illinois. Join us there at Benny's Chop House if you can, 4 p.m. till, I don't know, somewhere around 6. Depends on how many beverages we have. We'd love some live audience participation, some live audience questions. That always makes these kind of live shows really fun. We had a lot of great questions last time we did it. We'll, of course, do it again. Give you guys a chance to join us here on the old program, make your questions and comments heard. And if for some reason you can't make it to Chicago, you're beaming in from parts unknown, don't worry, we won't exclude you either. If you have a question maybe you'd like us to answer on the live show, send it in to us. Maybe we'll do a special live mail block edition with all sorts of great questions. So if you have a question, you've been sitting on it for a while, send it in. If you want to hear us answer it with a few beverages in us, it should be pretty fun. And on behalf of Uncle Mike and the Viceroy and the Rock Lobster and, of course, myself, I want to thank all of you. Hopefully we'll see some of you next week. And, of course, we'll see all of you right here next time on The Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA. The
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.